Good afternoon. This is Tom Alexander. It is Sunday, October 17th. It is about 1:20 p.m. Eastern Time in the U.S. here in beautiful Charleston, South Carolina. And we're going to do the review of today's report. And as usual, I would please request that if you find value in this, that you like it. And if you have not subscribed to my YouTube channel, that you subscribe. I'm going to be posting more and more things through YouTube, and you will be notified if you subscribe when those things are posted. Okay, so let's talk about the four primary U.S. trading indices. We had a pretty big week last week. We had two wide range up days. Certainly Thursday was a wide range up day. Friday closed on its high. We have two consecutive gaps up. We have the Dow. Oh, you guys can't see this. It would be helpful if I'd show the screen, wouldn't it? There we go. Okay, so here are the four primary U.S. trading indices. These are the cash market charts. And we've had consecutive gaps up heading into Globex tonight. We'll see what happens there. The Dow is not too far from a new all-time high. And as I said in the report, I would not be surprised to see the Dow trade to a new all-time high, which is less than 1% away in the cash market, okay? Now, I would be surprised to see any of the other indices, including the ES, trade to a new all-time high before there is some sort of retracement, some sort of balance that forms. And I'll get into why in just a minute, but that's what I think. The top that we form and the retracement that occurs, I'm not in the business of guessing the magnitude of things too much. I am a trader. Hopefully, if you are following me, I'm trying to give actionable trading advice. And when I don't know what's going to happen, I'll tell you. Nobody knows what's going to happen all the time. We do have a lot of upside momentum coming into the Globex session. I do think that we'll see higher highs in all of the indices. Now, the Russell is acting its usual bizarro self, so it's a little bit different. But talking about the NDX, the SPX, and the Dow, and their derivatives. The momentum was very strong. We had a wide range up breadth day on Thursday, and we'll talk about that in just a minute. We followed through with another gap on Friday. So a lot of momentum here. We've gone a long way in a short period of time. And a basic auction market precept is that time regulates price. So we may go a whole lot higher, but we're not going to go higher at the rate of change that we have been moving higher off of Wednesday's session low. So while the Dow may claw itself to a new all-time high, what that would do in my mind, and again, I don't want to get too far out on a limb with supposition here, is set up yet another divergence among and between the indices with this momentum. And I think we've seen a momentum peak, which typically precedes a price peak. And that we'll see at least a short-term top, I'd say by Wednesday. We'll see. But that's sort of what I'm thinking. The levels that you see on my chart here, the Dow is closed above this level. These are levels from the charts last week. You can click on the link in this report and you can go back and see exactly what I said, both in terms of the charts as well as the video did last week. We've exceeded the level in the Dow. We're into that level in the S&P ES, and we're just below it in the NDX. So, the Dow could easily go to a new all-time high. The S&P maybe slightly exceeds this level, and then the NDX settles somewhere up in here. And then we have at least 2, 3, 4 days of chop and balance that would include some level of retracement. And it's the depth of that retracement that will give us more clues about what this particular top could mean from an auction market perspective. But I will be expecting based on information at hand that we'll see at least a short-term top by at least Wednesday. Okay, let's take a look at, let's take a look at breadth. This is a 240-minute cash chart of the S&P. This is the SPX. And this is sort of the schematic of what I think could occur. I think we could have higher highs into Tuesday, tomorrow, Tuesday, Wednesday, somewhere between, excuse me, in the day session, between Monday's day session and Wednesday's closed day session, that we'll see something similar to this, where this was a momentum peak in breadth. We were right at plus 1900 or so. And then breadth came in on Friday, and you saw the Russell come in. The Russell is the most highly correlated of the indices against breadth. The Russell came in, the others went higher on less breadth. Now, I wouldn't be surprised to see breadth again, to see these, the Index, the S&P, and the Dow trade higher on even lower breadth. And then that's maybe sets up some sort of retracement during the week, and that includes balance. What else here? I had something, what would invalidate my view that a short-term top is forming? Well, what would invalidate my view that a short-term top is closer rather than farther away would be if, again, on Monday or Tuesday, instead of seeing a divergence in breadth and weakness in breadth against any further higher highs in price, would be if breadth expands again and closes around this 19 plus 1900. If that happens, then it will be a reset, and then you can expect higher highs, divergence in breadth, et cetera. And this, this is a type of thing that can go on for a long time. Here's an example, okay, way over here. And I'm not going to say that I'm expecting this. Actually, I'm not. Can't really tell you why, just sort of a hunch. So danger warning. Here's your divergence here. Your momentum peak was way back over here, somewhere on this was back in July, the 19th or 20th of July. And then we went higher all the way into middle of August, almost a month later. On this game. Now, you did see that we got two-sided in here. This became sort of two-sided as well. We've talked about that in the past in previous reports. You can go back and see what I was saying at that point in time. If you want to go back that far in the reports, it's there. Okay, so that's sort of what I would expect. I'm off the top of my head, I don't know what exogenous events are occurring next week. I'm sure they're earning. I'm sure there's Fed stuff, but from an auction market perspective, what the buyers and sellers are doing, that's what this is telling us right now. You guys have a wonderful rest of your weekend. And if something changes dramatically, I'll update it. Oh, by the way, we're having a very important webinar on Tuesday on trading the 30-minute chart. So you incorrigible day traders that want to Twitch trade, maybe if you're not successful, maybe something you want to take a look at. And one thing I'm going to discuss in that webinar is that you actually lower your risk, not increase your risk by going up in time frame. So I hope some of you that may not be members will decide that you want to give us a shot for 30 days, and we'll see you then. You guys have a great weekend.